right. Thank you guys so much for coming out. I know it's Friday, getting into the afternoon, so definitely appreciate you guys taking the time to listen in on the great sharing that we have today from this panel of very, very experienced payments folks. I'm going to jump right into it. Maybe a quick introduction of myself before we go in. I was co-founder of hoolah. It's Southeast Asia's first real buy now, pay later service provider. We were acquired by ShopBack just about a year ago, who provide cashback rewards loyalty platform across Asia Pacific. What I'd like to do first is ask the panelists to introduce themselves, but at the same time share a little bit about their experience with buy now, pay later, and how they've come across it, how they've interacted with it in the past. Shadab, maybe you can start.
Thank you. Thank you, Arvin. My name is Shadab Taiyabi. I am the president of the Singapore FinTech Association. We are the National Industry Association in Singapore, representing over 800 plus companies, including multiple verticals across payments, investment, investech, wealthtech, regtech, and so on. Buy now, pay later companies is an important segment of our membership base as well. In terms of experience, for the past year, we have realized that quite a few of our companies are actually existent in Singapore. They have their business models on BNPL. There is no regulation in BNPL in Singapore. So earlier this year, or late last year, we decided to have a chat with the various companies, and we also brought about the idea of how we should look at some form of self-regulation. And this is where the idea of having a model code of conduct or a BNPL framework was formed. We also consulted with our very collaborative regulator, MAS, on the nuances on this. And I'm happy to report that we've been able to launch a code of conduct which allows our companies to clearly identify ways of managing their business going forward. The idea is to make sure that there is no indebtedness amongst the consumers, and we are self-regulating ourselves in a way with certain enforcement mechanisms designed around that as well, including access to our own credit bureau that we will be launching private as well.
Excellent. Thanks, Shadab. Melissa?
I'm Melissa Guzy. I am the co-founder and managing partner of Arbor Ventures. We've been investing in the category since 2014. We were the seed investors in Payday, which was the first real exit in Asia in this space, which we sold to PayPal for close to $3 billion. We then invested in the Series A in Akulaku, which is really focused on Indonesia, and then we were the seed investor in Taiyabi in the Middle East. So we've invested in the space quite a bit. I actually don't like the term BNPL because it's a category, but what you see is in every country it's very different, and we can get to that later. But I look at it as just next generation virtual credit cards. You're just not physically carrying something, but you're carrying the ability to get credit, whether you're creditizing debit or you're just getting more credit, which is similar to a credit card. So we've had a lot of experience in the space globally, and we continue to look at the business model. And of course, because we've been in this space so long, we work with the regulators over time.
Excellent. Thanks, Melissa. Aung?
Hi, I'm Aung. I'm the founder and CEO of 2C2P. We have been around for nearly 20 years. We are going to celebrate our 20-year anniversary next year. And what we do is we provide payment processing services to Southeast Asia companies and global companies to connect to any form of payment available in Southeast Asia. So far, we have connected to over 250 types. And of course, BNPL is one of them. So we see BNPL in 3 different flavors. So the first flavor we have been connected to so far, like Melissa pointed out, is credit card companies. We connect to traditional credit card companies where they provide payment by installment. Some market, we call it installment payment plan. Actually, it is a flavor of BNPL backed by credit line from a bank or card issuer in some countries. And then we see FinTech BNPL like Klarna, Payday. We connect to all of them as well. In Southeast Asia, of course, we connected to hoolah before acquired by ShopBack. And the less BNPL flavor we are seeing right now is card scheme like Visa or MasterCard coming up with their own buy now, pay later protocol and helping their members, which is card issuer, to offer BNPL service. So we see BNPL from the service provider point of view, where we connect to BNPL and offer that to our merchants. So that's how we relate to BNPL.
Excellent. Thank you so much for that. I think we'll jump back to the point, Melissa, you were making earlier just with respect to the different geographies and that localization aspect. Given your experience with BNPL or providers across the world, are there any nuances that you see that are specific to a single market that you'd want to call out or just share from your learning?
Well, I think, and I have to say before I answer that question, we were an investor in 2C2P as well, so proudly backed Aung. I think, it's just very different. In Japan, we were regulated from the very beginning, but we also had a much lower cost of borrowing, and the Japanese investor is quite different. We were solving a problem there that wasn't necessarily for buy now, pay later. What we found was the original traction was we were solving a real merchant problem, which is even though Japan has credit card depth, meaning very high credit card penetration rates, still 45% of the transactions online were done with cash. And what we were doing is we were solving a problem for CODs and returns for the merchants. Mm-hmm. So the original problem we solved was not necessarily for the consumer, but was actually for the merchant. And then ultimately, because it's a B2B2C company, you ultimately have to solve the consumer issue. But I would say we were really good at plumbing initially. When you get to markets like the Middle East, which are really just starting to grow, we saw very similar, it is quite interesting. In Dubai, acts a lot like Japan, high credit card penetration, but a lot of use of cash. But Saudi Arabia is very much like Indonesia, where you just don't necessarily have a lot of credit card penetration. So the reason I say it's a category, but they're very different, is you have to solve, there's two things you have to solve in the market. You have to solve a problem for the merchant and a problem for the consumer. And you can't forget that you're B2B2C. And so they really do differ around the world, even though we have this large categorization of it. But the US and Europe are very different than, I would say, each one of the individual markets. Maybe Australia is similar to the US.
Oh, thanks for that. I think I've lost my connected mic. Aung, maybe you can shed some light on Southeast Asia more specifically on what you're seeing with the different types of products as well and how they differ from markets.
Sure. For Southeast Asia, like I mentioned earlier, we started leveraging on credit line and then tweak the messaging to the bank a little bit so that cardholder can pay charge one time and then pay by installment for the 6 months or 12 months. In Singapore, they can do up to 24 months. And then we have a surge of new payment company coming in, such as before BNPL, we have a personal loan type of product launched by banks and some other credit related companies where they try to provide one-time personal loan against the e-commerce purchase. That was, I will say, the very beginning of so-called BNPL of we know of today. We tried to connect to that. And at the time, both credit card companies and this kind of personal financing companies are already regulated and operating under the license of central bank. As soon as BNPL companies come up to us with the ambition to connect to our merchants, we always think of they are not really regulated. How can we connect to them? Is there a way because as a payment processor, we have to operate under the regulation of the central bank, sometimes Ministry of Finance for the ethics. So initially, we
are looking for. Please proceed to the show management office in Hall 4 immediately. Thank you.
Sorry about that.
So initially, we don't really want to connect to BNPL players at the time because we worried that by connecting to so-called unregulated BNPL player, we might come under the audit by central banks. So we reach out to central bank and then we ask whether we should connect to them. Over time, of course, no central bank can clearly provide us with the go, no-go information. So we have to take a calculated commercial decision to connect to a few leading players across the market. And different market evolve differently. I mean, we operate in, the way we connect with BNPL player in Indonesia is different from Thailand and Malaysia and Singapore. Maybe we can discuss in detail right after, right after this, at this point. Yeah, that's how we see it. I mean, initially we thought that BNPL player will just come and then disappear right away because they are not regulated.
Interesting. It's a pragmatic approach to make sure that you had at least, or try to get some feedback first before going down that road. Just before we go to the other question, just behind us is a QR code, so you guys can join the conversation, ask some questions yourselves. So please do scan and put those in, and I'll be sure to refer to those later. Shadab, maybe you can give us a lens from Singapore. We're here, we've got lots of BNPL providers in the market operating. How have you seen that evolve in Singapore?
First of all, let me put that in perspective in terms of number of players. It's close to 10 plus at this point of time. And the overall transactions as of 2021 on BNPL were about $440 million out of the $103 billion done through credit card and debit card payments. So it's still a very relatively smaller segment, less than 0.5% of the overall transactions. Now, these players have had, of course, it's not regulated in Singapore at this point of time, but we also realize that as this 0.5% grows to a significantly higher number or the threshold increases, there is that risk of consumer over-indebtedness coming in as well. And that's the reason why we took that step of organizing ourselves as a community together as the companies and work with the regulator in coming up with the code of conduct. Which essentially works on a few principles. I'd like to highlight a few of them as well. One is, of course, making sure that there are principles or specific items defined in the code of conduct, which thankfully, for me as an association leader, one of the aspects is getting everyone's consensus around. And you can imagine with 9 people preparing the broth, it could slightly be challenging. And you're not talking about a review of a consultation paper. You're talking about coming up with a code of conduct. Each and every line item has to be agreed by all the players. And we managed to get it across the line with everyone agreeing to it. The enforcement mechanisms in there are, it's of course self-enforced, with an oversight committee that is to be elected by the members themselves. And we have identified it by putting a certain fixed number, as $2,000 up to a credit limit that anybody can join a BNPL, or use a product from a BNPL provider. But then, of course, there is element of higher credit limit if you can do an additional credit risk enhancement. And of course, Arvin, you have been a very strong part of that whole journey, a very significant part of the whole journey with other players as well. Then the other aspect is, of course, having a private credit bureau, which allows the players to share the information amongst themselves. And also there are things like any individual customer can actually opt out, and then they are not being promoted to. So it's a lot to do with ensuring that BNPL players are following a certain code of conduct, and they can be accredited through the process that is either through self-declaration or through working with a certain panel of accredited providers, which can be the large consulting firms or our own local players who are part of the FinTech community as well. That mechanism has been verified or so-called ratified by the community, and we have already launched it. The idea is to have our first set of accredited players coming in by May 2024, which they can use as a marketing trust trademark that they can place on their marketing signs as well. So hopefully it will all work out fine for us in the Singapore context.
Looking forward to it, definitely, and participating, of course. In this sharing, it's quite interesting. There are moments where there's ambiguity in Aung's example. He's not sure how to engage with and work with BNPLs. Melissa shared that Japan started out as a regulated market for payday, so on day one, had to be regulated. And Shadab sharing about Singapore, where we're working on something that's sort of in between, where we've got a code of conduct, it's endorsed by the industry and developed by the industry through the engagement with SFA. I guess where I wanted to go with this is, what about the next evolution? What about markets where we have nothing, but we're likely to get something more direct in terms of regulation. And Melissa, you may have seen this happen in some other markets where it evolves and changes with the regulator. How do operators adapt? How do they adjust how they behave and work so that they can make the most of that circumstance?
Well, number one, you're not going to escape the regulators. So I think FinTech already has gone through that wave where people thought, you know, we're we're in charge. I think they've learned they're not in charge. The regulators are in charge. So it really comes down to, yes, regulation is happening around the world. It will continue. I see one of the questions about, you know, if it's like a virtual credit card, are they going to be regulated the same way? I think ultimately they're going to end up in most places as a regulated industry. Look at India as another example of regulation. It's going to come down to the harshness of regulation will depend upon, I think, a couple of things. But one is going to be obviously behavior of the companies on the credit side, meaning aggressiveness of issuing credit to those that should not get credit, and we get a big downturn and we see a lot of defaults. Number two is this is balance sheet risk. Can these BNPL companies really manage their credit risk? And that's yet to be proven because we're just at the beginning of a down cycle. And I think it's going to become down to also spreads. As interest rates are increasing, if you have third-party capital that you're lending out, which is most of the models around the world, you're securitizing it, you know, what is your spread going to look like after your net losses? The combination of how the industry handles it in different markets around the world and how these companies mature, I think will depend upon what the regulation ultimately looks like in each country. But we've already seen, we have regulation in different parts of the world, and some of these companies have had to grow up already in a regulated environment.
Yeah, certainly a case in some of the more established markets that had pretty clear rules around lending and consumer engagement for lending. There's a really interesting question that's come up, and I want to throw it out there for you guys as well. And it goes back to the articulation, I think, Melissa, not BNPL, but a virtual credit solution that's available to folks to be able to make use of. Maybe not so much on the same regulation, because there's ways to justify that it's different, but I like this aspect of what are the new risks, or what's the nuanced risk of buy now, pay later in the form that it's provided today to consumers?
Well, if I can jump in, we continue to see that BNPL will continue to grow. Every year we commission a report together with IDC, and right now we expect that by 2026, BNPL will be at 10 billion. I mean, higher than what you have seen today. That is about 2 to 3x growth. So when you look at the difference between credit card and BNPL is as follows. For credit card, when you apply for credit card and if you receive a credit line, let's say $100,000, you can use this credit line at every type of merchant. The credit line provider does not have information about where you are going to spend that credit line. With BNPL, before you give credit line or before you approve that transaction, BNPL provider is aware of what exactly this consumer is buying. Because of that extra information, BNPL player can successfully provide whatever BNPL service they are providing. As a payment tech company, where every time we look at this flow, we discuss, is there a way for credit card network or credit card company to provide extra layer of information, such as the merchandise consumer is buying, and with that, they can have the informed decision, very similar to what BNPL companies are making. Then credit card companies will be better off to serve their cardholder, somewhat similar to BNPL provider, or if I can argue, it may be even more better way because they already have a collection figured out. They have a large pool of credit line, etc. So that's what I'm seeing. If card schemes and issuing bank improve their protocol a little bit to have that extra information, not much, extra information about merchandise, that could be difficult problem for BNPL fintech company to solve.
Excellent.
He's exactly right. Long term, that orchestration layer of data transparency back to the credit card company will actually provide a very different environment than we're in today. Aung's exactly right.
It's going beyond where you're purchasing, but getting into the what and how and when and everything else with that transaction.
Yes, because credit card company has other information as well. Your repayment, are you repaying full? Are you repaying minimum? What are your other transactions, etc. It has much more data, except that this, at the point of checkout, they don't know the merchandise data yet.
Yep.
But returns, secondary sales of the product, like there's a whole other part of the industry that can be developed if they have the data and the merchant.
Transaction life cycle fully to understand that as well. And then plugging it back in and getting to know that customer very, very, very well. Excellent. Thanks for sharing.
If I may just add to that, just on the other side of that question, I would say that we've also taken a very moderated or regulated approach by coming up with a number in terms of being it much lower than the actual limits which are there for unsecured credit and credit cards at this point of time in Singapore at least. So that $2,000 figure that we have come up with per BNPL player is relatively much smaller because we also want to take a very conservative approach to start with, given we are unregulated.
That makes sense.
So, I mean, going back to this very question, right? If credit card companies and BNPL companies are now acting the same way, analyzing data the same way, then obviously the same regulation should be applied.
Correct. If the activity is certainly exactly the same and the way it's being done is exactly the same, then certainly. I think what we've seen is that, and perhaps looking back at the code of conduct or other approaches with regulators, is that the conversation isn't just about looking at existing buy now, pay later providers, but also other entities within a market who want to provide that service having to fall under that new regime as well as it gets laid out. Okay. Excellent. I'm going to stick to the audience questions because there's a lot coming through, and I do want to give folks a chance to get their voices heard. Just looking at some of the trends, there's a lot to talk about that. So maybe I'll make it more specific because Aung went down this line in terms of challenge, right? We've got a potential threat here for BNPL providers from traditional credit card providers as well. What other challenges do you guys see coming about for BNPL providers over the next 12, 24 months?
Oh, it's capital. I mean, absolutely. I mean, this is actually one of the most interesting aspects. Every time we see a business plan for buy now, pay later, you said, well, how are you going to get the credit lines? Because you can only raise so much equity from venture capitalists to prove out the risk. But when you actually look at around the world of the debt providers, it's a very limited number and shrinking. And so if you cannot get 200-300 million of credit lines, you're not going to scale to 100 million of revenue or 150 million of revenue. So it's actually a big risk for the startups today, or actually just a big risk for buy now, pay later companies, unless they've gotten to a certain size and they actually can get Goldman or PIMCO or some of the very large institutions to back. I think that's one big risk that a lot of founders don't talk about. But you're in a credit business. Even if your settlement's 20 days, you're in a credit business. Visa and MasterCard and American Express or Ali don't have those challenges. And I think as we go into this market environment, at least if you're running a BNPL company, you should be talking to your capital providers, not your equity providers, not the VCs. They're not who you need to keep happy at the moment. It's the credit guys.
Maybe
starting to talk about that future round, but yes, definitely on the debt side.
Another one I would like to add is collection. Collection is going to be very painful. At the moment, BNPL providers, some of them are leveraging on credit card as a way to collect. So you're providing BNPL for the installment, but at the point of collection, you will be charging the credit card, which is it really the... I understand that this is the short-term collection methodology for BNPL player to collect payment. It cannot be the long-term, because giving out credit and then using credit card to collect payment will be extremely cost inefficient for BNPL provider, because you can't pay credit card fees to collect back your money.
That's why they've got to work with a payment provider with multiple options to collect back. Excellent. There's a lot of questions coming through about the challenges of BNPL, so I might stay there a little bit and kind of twist it back to the banks. And Melissa, maybe this touches your point that you raised earlier on fintechs thought they run things. The regulators really are gatekeepers. But as I think traditional service providers enhance their UI UX, do you see that being a threat in terms of what fintechs, particularly maybe BNPLs, provide in terms of challenging their business?
So I'd like to start out with a buy now, pay later company is not a standalone entity. It's a wedge. And the real question is, if you're building a company, you may start with buy now, pay later, but what's your product roadmap for the future? And I think that once you essentially get to 3 million customers, how else are you going to monetize? What else are you going to do for either the consumer or for the merchant? As more and more companies improve their UI UX and increase functionality and features that may incorporate buy now, pay later, the industry is going to come under threat. Look at the U.S. Look at the market caps of Affirm. Look what happened essentially to Klarna. All of a sudden when you have a super competitive environment and now you have Visa who also offers it, basically your MDRs are going down, your revenue per customer is going down. Is your risk going down? Probably not. And so as we've seen in the developed markets, as this industry continues to mature, you're getting the margin squeezed more and more. So when we look at buy now, pay later, we look at it as a wedge into what else are you going to do? And if the answer is we're just a buy now, pay later company, you're not going to survive as the market continues to mature and develop. Because knowing Aung as well as I do, he will compete with you.
Absolutely. That's why you've got to be a rewards, cashback, loyalty platform that also offers a pay later solution.
If I may address these questions. So UI UX can be looking at from two things. One is at the point of checkout. Yes, BNPL companies are now providing awesome UI UX to the merchants at the point of checkout so that consumer can easily adopt BNPL companies. Now allow me to take you, earlier I indicated about the messaging layer, but allow me to take you through the consumer experience from the point of view of card issuer wallet. Let's say you log in to view your transaction history. Today in a country like Thailand and Indonesia, after you transact big ticket size, let's say you purchase a business class ticket, they will send an SMS by asking you to reply or call a number to convert that amount into 6 months installment. This is like a poor man UI UX already at the moment, but that can be improved by push notification. So they will receive their push notification, which is like most of you are receiving right now every time you transact online. But in the push notification, they can say, would you like to convert this amount to 6 months or 12 months or 24 months? If that function is improved by the card issuing application, so merchant don't even have to worry about UI UX. Merchant will simply go ahead and charge the card. Card issuer will take care of converting that into BNPL transactions.
Excellent. Maybe we bring it back to the regulatory perspective just to wrap the conversation in the next few minutes. And Shadab, I'll turn to you. There's one question from the audience specifically around SFA and the engagement with the BNPL industry. You shared a number earlier of less than 1% of transaction. Why was it important at this time for SFA to look at the industry, specifically around the timing to take that action?
I think the simple answer to that is being responsible. The BNPL segment or vertical of our industry, the players realize that the reality is if you are not conscious about how the effects can be negative for the consumer over indebtedness in future, you may end up in a difficult situation where heavy regulation may come in and so-called haunt you. So given that we in Singapore, we like to work very closely and collaboratively with the regulator as well. Under the guidance of MAS, we went ahead and decided to work on it right away because in the end, in future, as the transaction sizes or the transactions under BNPL grow, it may become a challenge if there are consumers reporting and indebtedness piling up as well. So we realized that it's best for us to move forward quickly and so-called front-run the regulation, if possible, with the pun intended. But the reality is we did it to be less regulated in future.
Got it. Makes sense. And I'll contrast that a little bit and maybe ask a question to the others. There are other markets in Southeast Asia, particularly Malaysia is going through a process right now of reworking their entire Consumer Credit Act. Singapore's taken an approach of working with the industry to develop something specific for Buy Now, Pay Later. Do you see a better approach, a more thoughtful approach? Why is there such a difference in the ways that other markets are reacting to Buy Now, Pay Later regulation?
Well, I mean, about 2002, 2003, e-commerce using credit card for the e-commerce transactions at the time was also less than 1%. But regulators started to look into the issues of how do we go through the security and all that started since the number of transactions are very, very small. So I think SFA is doing exactly just that. But different regulator will take it differently. I mean, we are in Southeast Asia where we have a country like Singapore and Malaysia leading the charge, but some other countries are also looking at how Singapore and Malaysia are doing and following suit. I don't see a few other countries in Southeast Asia taking this initiative at the moment. I think industry players are watching it carefully, how you are doing it right now in Singapore.
The only thing I'll say is I have a tremendous amount of respect for the Japanese regulator, who I don't think gets nearly as much credit as they should. They were first to regulate BNPL. They were very quick with feedback and guidance, and probably the most underrated regulator that's friendly towards FinTech of anywhere in the world. But Japan, was by far the first and actually most forward-thinking in BNPL.
That's really interesting. Was there anything unique in the market that kind of drove that or brought it about early?
Willingness to have conversations, take the time to understand what was happening and what Payday was trying to achieve, and then was very helpful in what regulation existed, what could be changed, and was actually very quick to react, which enabled us not only to have a lot of licenses, which actually created a competitive moat, but actually just very forward-thinking. So if there's a Japanese regulator in the room, my hat's off to you.
Kudos to the Japanese regulator for seeing that early and acting and taking those actions as well to support an industry. Interestingly, I think the point where I'll wrap our conversation in, and perhaps a shout out to everything that's happened from a regulatory standpoint, it does create an opportunity for operators as well. If you are able to adapt, adjust your business, and accommodate for the regulation that's coming in, it will make it more difficult for other folks that are trying to come in and launch a new business and perhaps go after your customer base or pivot into that specific area. The interesting thing of silver lining in that cloud of regulation. So thank you so much. Thank you to the panelists for sharing their thoughts with us. And thank you all for all of the questions that you guys have submitted. And apologies we couldn't get through all of them. Thanks.
Thank you so much.